Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning. Let's take a look at what Bitcoin did. All right, the CoinDesk Bitcoin Price XPX Index is currently trading at $44,578. Bitcoin is slightly down over 1% over the past 24 hours, and the CoinDesk Ether Price ETX Index is at just under $3,000 right now. ETH is down about 1.2%. And the new DFX, CoinDesk's DeFi Index, is at $642. DeFi is down about 73 basis points over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So looking at some of our top stories globally, we're seeing Japan's Liquid Global Exchange has been hacked. About $90 million in crypto has been siphoned off, Emily.
Yeah, so this is really interesting in the context of Japan because Japan has been home to two of the most famous crypto hacks of all time. One is obviously Mt. Gox, and then the other is CoinCheck. And so Japanese regulators are very sensitive to this concept of hacking. After the CoinCheck hack, the Japanese crypto world kind of froze for over a year because regulators were so nervous about it. So I think the really interesting thing here is to see how Japanese regulators will react to this latest news.
Indeed, and this is in the midst of course, the ongoing Poly network hack that has just happened, the biggest hack in DeFi history, $600 million siphoned off. And looking at the markets, we're seeing a bit of more profit taking today, Lawrence.
I mean, you could call it profit taking, sure, but it could also just be lack of enthusiasm. Yeah, we're inching closer towards that 44,000 level. 42 is the next support, if you believe in the voodoo that we call technical analysis. But yeah, look, I think if we step back for a second, we also have an economy that in the U.S. at least where the jobs are coming in. We see that we just had a jobs report come out. The payroll. The jobless claims were lower than expected. So there's some of that, but there is a little bit of a tinge of loss of confidence, if you will, in the Biden administration, given what's going on in Afghanistan. Believe it or not, that people are starting to think, well, can this government also be trusted with the fiscal stimulus to get over COVID? That we're seeing a failure to execute a strategy in Afghanistan. Does that translate also into the economy? That remains to be seen.
All right.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, well, earlier I mentioned the weeks-long saga of the biggest DeFi hack in history, and that continues after hacking $600 million from Poly Network and returning most of it. The attacker is starting to return the remaining $235 million locked in a multi-sig account. This morning, $97 million has been moved back to Poly Network, and the network has tipped the hacker $500,000 as a bug bounty as a thank you. And joining us now to discuss is Joseph McGill, former U.S. Secret Service and Postal Investigator, and now part of the TRM Global Investigations team at TRM Labs. Welcome, Joseph. So, Joseph, one of the first things I wonder is this a white hat hacker, a good guy who will return the funds, or is this someone who found a bug in the code, made off with $600 million, but then realized the money would be tracked and is now willing to return the funds?
Yeah, that's a great question. Thanks for having me on. I think that's been a debate in the community. Just to be clear, there's a few different differences in between a black hat hacker and a white hat hacker. A black hat hacker typically writes malware. They're experts in breaking into computers, and they do it for financial gain. Sometimes they do it for entertainment. A white hat hacker typically has a pre-coordinated contract with a company to where they may find exploits, infiltrate their systems, and then report that back. So in this case, it's very clear that this was not a white hat type hack. Mm-hmm. The situation started.
He seems to be enjoying it.
He is. It's been wild.
So how would you, you were saying, how would you evaluate this situation? Maybe you could walk us through it. How would you evaluate the security of Poly Network, how this exploit was executed and such, and perhaps you could walk us through what happened.
Yeah, absolutely. So, the last 9 or 10 days have been pretty crazy. Poly announced they had a 600 million hack. It hit across 3 different blockchains, and within a few hours, we saw various security companies indicating that they identified the potential flaw in the contract having to do with the type of bridge in the Ethereum network that connected multiple blockchains. And then we saw that a potential inflow from a exchange based in East Asia may have been identified to the attacker. Security company claimed that they had information associated with the attacker and had shared it with various companies. And from there, that's when the story, I think, really started taking a twist. And we saw the hacker all of a sudden started communicating via Etherscan and trying to change the game a little bit. It's been quite wild.
So they can actually identify this hacker. Is that the case?
Well, I don't think we know yet. Supposedly, they found some breadcrumbs at one of the exchanges based, I think, in China. And so, often cases we look at these and we find out the attackers use synthetic identity theft. Maybe they use a real social security number or ID and combined it with other fake information, or they could use stolen information as well. It's very unlikely the hacker's true KYC was probably at that exchange, but I'm hopeful that maybe that was a first mistake.
So what would motivate somebody to take, well, we know why they would take hundreds of millions of dollars, but what would motivate them to give some of it back?
Yeah, that's a great question. I think just because what we're seeing here is how great the digital asset community is. When something like this happens, it's very bizarre. Everyone comes together, they work well together. And right after the hack, you saw very many people from across the globe working together, trying to identify different breadcrumbs on the chain. And so I think the attacker saw that it was going to be very hard to move $600 million very quickly. And at that point, I think a decision was made to try to change the narrative of maybe this person's the good person in the room and they're trying to find an exploit and they're trying to help Poly Network out.
Hi, Joseph. I was wondering if you could give us a bit of a larger context here. So this is obviously a really bad look for crypto because for people who are already wary of the industry, they just see these headlines about hacks and they're like, oh, crypto is so unsafe. I mean, how does this sort of crypto hacking problem, how does it fit into just the larger problem of traditional financial institutions? Like, I think people have the impression that crypto is worse or more dangerous, but how do you address that concern?
Well, I understand those concerns being former government. I used to be skeptic when I first started looking at crypto, but what I've learned about the blockchain and various crypto hacks is that the blockchain is very transparent. Investigations take a long time, but you have a better chance of tracking stolen or illicit funds on the blockchain than you do traditional financial or fiat crime. When you think of something like a business email compromise, which is billions of dollars a year in damages for individuals, that is traditional wire transfers. And people think that crypto is the worst phenomenon out there, but business email compromise right now is probably the biggest threat to the consumer across the globe.
I'm wondering, how would you evaluate the security of Poly Network? Is it very weak, or are all DeFi platforms vulnerable? And I say this as a report from CipherTrace says that DeFi has accounted for over 75% of crypto hacks this year.
Yeah, I can't give an official comment on the technical aspects of the contract for the Poly Network, but I think just in general, what we're seeing here is that DeFi protocols are great targets for hackers, and that's because the contracts are open source. Anyone can view the contracts, and so if you're an individual that's looking to exploit that, your biggest factor is time. How much time are you going to put into breaking the contract and trying to find that flaw? And when you look at other types of network intrusions and just traditional infrastructure, typically the code is not open source. You have to find an attack vector via either phishing to a website, or an individual at a company clicks on the attachment, and that's how the individuals gain access to the network. But with DeFi protocols, it's open. And so I think what we need to see potentially is an increase in bug bounty programs and DeFi platforms that reward these true white hat hackers or gray hat hackers that want to have vulnerability disclosures. And I think that would help increase the overall security of the DeFi ecosystem.
Before we get to that point, though, is there anything else a DeFi platform can do prior to launch that would make it more secure, that would help them out?
I think it's very natural in this crypto space is to move fast and break things. And so I think sometimes it's great for these DeFi companies that are launching these great products. They'll continue to do so, just to take a tactical pause, pay the money, and have your contracts audited by a reputable security firm out there, and see what they can find before you go live. Finding these flaws in your contracts before you go live is going to be better than down the road. And also, I would encourage these DeFi protocols to enter reputable bounty-based programs that will pay individuals that find flaws in your contract.
Joseph, I'm wondering if you know anything of this latest hack out of Japan with their liquid global exchange.
Yeah, this is crazy. This is a crypto world, right? Just a week ago, a $600 million hack, and late last night, the exchange announced that their system, I think they called it their warm wallet, was compromised, and funds upwards around 80 or 90 million were moved between Bitcoin, XRP, Tron, and I believe a few other coins. And that's what, I think TRM's selling point is. We have some great coverage across multi-assets, and our customers can view that in one place.
I'm wondering, there is this narrative that cryptocurrencies are untraceable, but they are traceable, right? So I wonder, with teams like yours, you're constantly tracking the movements of these cryptocurrencies, these digital assets. And so is it not as anonymous as it is made out to be?
Right. It depends on the protocol, but in general, Bitcoin, Ethereum, Bitcoin is a pseudo-anonymous blockchain, and companies like TRM are very good at identifying attribution of illicit actors and identifying the various flows. It's very transparent, and it offers great insight for regulators and law enforcement that are only looking for the small percentage of crime that is occurring on the blockchain. There are obviously privacy coins out there that are not trackable. But I'm not seeing a huge increase in illicit crime on these privacy coins, because the reality is that the privacy coins have a regulated liquidity problem, whereas BTC is a great off-ramp, and there's no liquidity problem there, obviously.
All right. Joseph, thank you very much for your insights. We'll keep track as these developments unfold. Appreciate you coming on the show. That was Joseph McGill at the TRM Global Investigations team at TRM Labs. Coming up, checking in on Asia and the cyber drama. We'll talk more with a markets analysis with our next guest, Ryan Selkis at Messari. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 19th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, Hong Kong-based Sonic Capital launches a green investment initiative. In China, a Shanghai court rules that Bitcoin is a legally protected virtual property. And Australia and Singapore team up on a cross-border trade blockchain trial. Let's get you up to speed from Asia to the world. First up, Hong Kong-based venture capital fund Sonic Capital has launched an environmentally conscious, actively managed certificate. What's that exactly? Well, blockchain technology has had its share of bad press with regard to its environmental impact of late, but this new investment option aims to change that. Sonic Capital says its Sphere certificate will invest in blockchain companies that are tackling climate change. Forecast News' Lucas Caccioli has more from Hong Kong.
Sonic Capital has launched Sphere in collaboration with Zurich-based Tavis Digital. The investment product uses the UN's 17 Sustainable Development Goals, or SDGs, as its guiding framework, while applying environmental, social, and governance investment criteria. The UN SDGs address the world's most pressing challenges, including climate action, It requires a strict reduction in greenhouse gas emissions, as well as climate adaptation action. Blockchain-based technology and business solutions show significant potential to deliver a positive impact on the environment, with Sphere investing in areas such as carbon markets, renewable energy, and supply chain traceability. Sonic Capital told Forecast News that such credentials are essential.
When investors come in, they're looking for an ESG compliant company investment opportunity before they allocate funds into a specific proposition, project, an opportunity, or company or business.
Bruce says he's also seeing a large number of corporates entering the space with endless potential for growth. For Forecast News, I'm Lucas Caccioli in Hong Kong.
Meanwhile, in China, in the eyes of the law, Bitcoin ownership is legit. The Minhang District Court in Shanghai says that Bitcoin is a virtual property protected by Chinese law. But the court did reiterate the People's Bank of China's stance that crypto is a virtual property, not a currency that is allowed to circulate. Forecast News' Timmy Shen has more from Taipei, Taiwan.
The plaintiff in the case claimed the deal they made to buy Bitcoin mining machines was invalid, given the People's Bank of China's 2017 guidance prohibiting initial coin offerings. They had demanded a refund after canceling the order. The court ruled the deal was valid, saying Bitcoin's exchangeability, excludability, and availability mean it has the attributes of a virtual commodity. According to a report by Decrypt, the ruling comes in line with a similar decision made by Hangzhou Internet Court in 2019, saying Bitcoin should be considered legal virtual internet property. But there are nuances to ruling on crypto-related cases in China. In July, a court in Jinan said buying cryptocurrency is not protected by law, and neither are contracts related to such deals. Meanwhile, the PBOC has pledged a continuous crackdown on cryptocurrency trading and speculation as part of its work plan for the second half of the year. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
And finally, Australia and Singapore have joined forces to carry out a cross-border trade blockchain trial. Australia's Border Force says it has now concluded a trial with Singapore Customs that issued and verified trade documents between the two. It showed that trade documents issued in Australia offering instant authentication on the provenance of goods could be embedded in QR codes on digital certificates of origin or COOs, which were then accepted by Singapore Customs. Now, the trial was designed to make cross-border trade more efficient by reducing both time and cost. Well, just last month, the Global Shipping Business Network said it was trialing the use of blockchain in a similar way to speed up cargo release at ports. This trial offers yet another step towards getting goods on shelves and onto your doorstep faster. And by cutting out the need for printing and delivery of paper-based documents, it also offers a great environmental benefit too. All in all, a pretty green blockchain tech day today. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, time for our live look at Bitcoin. The CoinDesk Bitcoin price XPX index is trading at $44,643. Bitcoin is down about 1.4% over the past 24 hours, and the CoinDesk Ether price ETX index is right now it's above $3,000, but ETH is still down roughly 1% for the day, and the new DFX CoinDesk's DeFi index is trading at $643. DeFi slightly down about 0.6%. And joining us now to discuss the crypto markets and more is Ryan Selkis, CEO of data analytics firm Messari. Hey there, Ryan. Good to have you on. So, taking a look at the crypto markets, it's slightly down, taking a bit of a breather today, but would love to hear your markets outlook.
I tend not to look too much at the day-to-day swings in the market. I think directionally, this year has been extremely positive. We had the dip in Q2 that was largely driven by some of the chaos in China, by Elon Musk's tweets, by the ESG narrative really picking up full steam in a negative way when it comes to proof of work mining. And I think since then, the rebound has been largely attributed to de-risking many of those issues. A lot of the action last week, I think, is going to be tied somewhat to the activity going on in DC and the infrastructure bill. But in terms of day-to-day, this is a very volatile asset class. So up or down by single digits is par for the course.
Do you have a price prediction for the end of the year?
I'm a perma-bull. You all know that.
So, Ryan, we saw some big movements around centralized exchanges like Binance, and overnight, for instance, a lot of Tether has left Binance, and we also saw a lot of Tether go into places like FTX, particularly. What do you think is going on here? What's happening with flows right now in the market? Is there something? This is outside the U.S., of course. This is in Asia, and there's a lot of regulatory pressures. What do you suppose is happening?
Well, with Tether in particular, and the stablecoin environment in particular, I think that's something that we're keeping a close eye on, and think there's a lot of layers to the story of what's happening in the stablecoin markets. In general, with stablecoins, we've seen an unrelenting march upward in terms of market cap liquidity, dollar deposits that are locked in USDC in the various stablecoins that are powered by Paxos, custodied by Paxos, obviously Tether. And I think one of the biggest misconceptions in the market right now, at least the institutional market, is whether Tether is properly backed. And I'm not going to necessarily weigh in on that argument one way or the other, because no one is going to trust the audits that come out of Tether, no matter how much evidence is presented. And frankly, no auditor will likely wade into those waters, because the risk outweighs the reward in getting involved. I think at a high level, though, the inflows, more often than not, if you talk to trading desks and other firms that are in the know, are legitimate. Tether's liquid, and ultimately the reason that we have this opacity in the market is due to unclear regulatory requirements, and the fear in the market that if some of these stable coins are fully regulated and over-regulated, then what's going to happen is you won't actually have a crypto asset. You'll have basically the equivalent of a central bank digital currency, which is subject to surveillance and censorship. And so I think Tether, for better and for worse, has become the Wild West stablecoin option that is a necessary component, at least today, of markets infrastructure. That impact might wane over time as we see other well-regulated options, as we see more institutional investors rely on those regulated options for their trading pairs. But today, I think that Tether flows are real, and they'll continue to be real, even if some market skeptics might disagree or be concerned about the viability of their reserves.
So, what can they do to allay those kind of concerns? Obviously, they had issues in the past. They had cases against them in court, and they've admitted that they might not have been entirely one-to-one back. Of course, that's when that all started. So, what could they do now that would allay fears or concerns in the market that they don't have those assets?
Honestly, I'm not sure. I think if you look at the complaints historically, it seems that any shortfalls that they did have were very likely temporary due to seizures in international accounts or transfers in international accounts that were going to be adjudicated in whichever jurisdiction you're talking about. I'm not a Tether insider. I'm not affiliated in any way with Tether or Bitfinex, so my speculation is as good as the next person's. But from an optics standpoint, I honestly don't know what Tether and Bitfinex or any affiliates of Tether could do to satisfy some of their critics. And I think that's going to be something that will only be de-risked over time by the proliferation of other regulated stablecoins that are under U.S. and regulatory oversight, but they come with trade-offs, like I said. So if we get into an environment where all of the stablecoin transfers are essentially permissioned because they're surveilled and transactions can either be rolled back or censored outright, you will still have alternatives that are permissionless and free to move without encumbrances from the regulated, centralized entities that are facilitating the transfers. So it's one of those things that we wait and see. It's a known unknown. And I think in the meantime, I at least don't lose sleep over it, but it's one of the known unknown risks that are in the market today.
Ryan, you've been very vocal on your opposition to the crypto tax provision of the infrastructure bill, and you've sort of suggested that the crypto industry or crypto advocates should take a more confrontational approach with the government and with regulators. Why are you advocating that, and what exactly is the plan?
Well, I should be very clear that I'm not advocating against the crypto tax provision. I don't think anyone that was battling in DC was advocating against folks in the American crypto ecosystem actually paying their taxes properly and on time. The argument was about the definition of a broker and the technical feasibility of individuals or staking services or other validators in these decentralized networks actually having the ability to surveil their customers, issue 1099s, and serve the same function as actual regulated brokers. No one that I know of is arguing that Coinbase and Gemini and Kraken and the other regulated money transmitters that are already regulated on a state-by-state and federal basis, that they should be cooperating and part of the solution for tax reporting. And in fact, that'll be a convenience for most of their customers to have clarity on that point, much like you would if you're a retail investor leveraging Schwab or E-Trade or any other brokerage. So that's not really what's at issue here. I think what's at issue is that we had a bipartisan approach to amending the technically infeasible language. It was blocked by a lone senator who objected not on the merits of the provision itself or the reconciled amendment itself, but because he didn't get his pet project also included at the last minute in this amendment process. And so now we had an instance of an 87-year-old child flipping over the chessboard at the end of the game because he didn't get his way. And that's American politics in a nutshell. What I've been advocating for, and what I think many people agree with, is that crypto is now large enough and it has enough grassroots support that that type of behavior and ignorance is no longer acceptable. So I'm not advocating for a burn all bridges, damn the torpedoes, storming of every single political representative. But what I do think we need to do is I think we need to be proactive about scoring candidates and elected representatives on their crypto policy. And the ones should be aggressively primaried and removed from office by as many means necessary as we can throw at them through the electoral process. The fives, which would be our supporters, should be backed in their races. And then the 2 through 4s, we just need to have a concerted education campaign.
Ryan, along those lines, this tweet really caught our attention. Yellen, the Treasury Secretary of the United States, is a white-collar criminal and grifter. We need to destroy crypto's enemies before they destroy us. Not hyperbole. I hope people are ready to mobilize beyond 1 week. And to give this tweet a bit of context, this is in response to a list of speaking fees paid to Treasury Secretary Janet Yellen from various banks, financial institutions, and think tanks. But this is a very aggressive tweet, and I was hoping you could explain.
Well, I'll leave that up to people that read the tweet and their interpretation of whether you think that a former Fed Reserve chairman, who's very well politically connected and was likely going to be on the short list of some major chair for whoever the Democratic nominee was, whether it was appropriate and expected that she would make $7.2 million for conducting a series of Zoom calls with other financial services companies in 2020. And I think any reasonable person would look at that and balk at the fees. They would balk at what is clearly conflicts in interest in terms of basically being at the behest of the Wall Street banks and backers that have paid her handsomely over the course of the last couple of years. And really, it's everything that's wrong with American politics. Is it blatantly illegal? No, but that's a function of our broken political system. And I think right now, the folks in the crypto industry, whether you're talking about regulated entities, whether you're talking about investors or just kind of retail participants in these ecosystems, they're fed up with that, like most of America is, because both parties are extremely dysfunctional. If you look at Congress's approval rating, it's routinely in the teens. And at the end of the day, this is the type of behavior that is frequently rewarded in DC and that everybody despises. So
Ryan,
I think
just to play devil's advocate here, you know, Messari has just closed a 21 million Series A round of funding led by a hedge fund billionaire, Stephen Cohen, at Point 72 Ventures. Do you feel there's a conflict there?
I don't see what the similarity is. I'm not holding elected office right now, nor am I holding office in any regulator that is responsible for courting financial activity in the U.S. So I think by extension, any privately funded company that has outside investors would have to basically hold the position of their outside investors. So I think I want to separate a couple things here. One is what is generally a bipartisan and very popular concerted effort by the crypto community to fix some of these issues, which are largely the product of ignorance in DC, not malfeasance or outright hostility, at least for now. And my personal political views and what I want to do to support that bipartisan effort, and then what Messari as a company does, which is provide information and data about the universe of crypto assets. So we are indirectly impacted by the provisions in DC, because if things go through as written and you take the most aggressive interpretation of what was written and passed, and that is ultimately implemented through rules over the course of the next 18 months, then ignorant politicians and regulators in DC are going to intentionally cripple the highest growth sector of American tech, which is crypto. They're going to essentially arm China from a geopolitical perspective. DCEP and their currency will have an outsized advantage over the digital dollar initiatives, which really should be running on crypto infrastructure. And at the end of the day, I think it's going to be counterproductive to their security concerns in terms of how do you actually run and monitor the potential systemic risks and national security risks of cryptocurrencies. The more of this is properly regulated and kept in the U.S. and run by U.S. entrepreneurs and participated in with U.S. Crypto investors at the retail level, at the fund level, and everywhere in between, the stronger we're going to be for it. And this is not even up for debate. There was one lone senator that objected to this provision, not even on the basis of the merits, but again, because he was having a temper tantrum. So that's where we are today. And I think this is going to be a winning issue to get on the right side of.
All right, Ryan, we got to wrap it there. But thank you for that update and appreciate your insights and congratulations on your latest raise. Right, that was Messari CEO Ryan Selkis. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick. So more movement activity in the ETF front. Van Eck is adding an ETF application with Ether futures. Tell us what's going on.
Yeah, Van Eck has now filed for its fourth crypto ETF application in the U.S. This one's for Ether futures. It joins a Ether spot market ETF application as well as a pair of Bitcoin-related ETFs. But I think the big thing here is that it is a futures. It is what we call a 40 Act fund. We were talking about this yesterday, where Galaxy and a host of other companies are trying to file these funds and applications because SEC Chair Gary Gensler has hinted that those might be more likely to be approved. I think the big question, though, is we've seen over a dozen Bitcoin-related ETF applications, but not as many Ether-related ETF applications. So the big question seems to be, is Ether going to be considered on par with Bitcoin in terms of approving one of these products or not?
Hey, so Nick,
there was some news from Gensler about. Oh, go ahead, Lawrence. Go ahead.
Oh no, it's just, you go first because mine's fun.
Okay. There was some news from Gensler about DeFi. Can you just break that down for us real quick?
Yeah, SEC Chair Gary Gensler this morning seems to be hinting that, he said explicitly that there's going to be DeFi regulation coming, but the SEC has been hinting at that for a little bit between the DeFi money market and the Poloniex enforcement actions. But I think, the big question is going to be, is this going to be regulation in terms of guidance and, explicit things that companies can look at, or is it going to be more regulation by enforcement, meaning the SEC is going to say, okay, here's what you can't do, but not necessarily provide details on what companies or exchanges, or I guess in this case, decentralized exchange providers or developers can be doing.
So now for the giggles, Jay Clayton got a job, didn't he?
Jay Clayton has become the newest member of the advisory board to Fireblocks, which is providing crypto custody and other services. And yeah, this is we've seen a number of high-profile former government officials joining crypto companies since retiring from public office. Former SEC Chair Clayton is this isn't actually his first foray into crypto post government life. He's also part of One River Digital Asset Management. He's an advisor to that firm as well. So yeah, no, it's the latest move.
That's a
any irony in
revolving
him
door.
taking it though?
I mean, I don't know. So here's the thing that kind of struck me, right? Fireblocks has been talking a lot about custody and using multi-party computation as a possible solution to addressing certain custody questions. Now, while Clayton was at the SEC, the agency published this whole request for comment on solving custody problems, and we know that custody issues have been a concern within the digital asset sector for approving things like ETFs, because how do you prove that no one else has the private key? So this actually kind of makes a lot of sense to me, because this is a problem that Fireblocks is looking to solve, and it's an important one to the broader digital asset market.
We'll see if he lasts longer than 3 months. All right, Nick, thank you so much for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'll be back at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.